This morning on The Fix, we look at what's behind the confusing messages coming from the government and the South African Reserve Bank over its mandate and, of course, the role of the central bank. Joining me to discuss this morning is quite an esteemed panel. I've got Professor Patrick Bond in the studio. We've got Dr. Iraj Abedian that's joining us via Skype. We've got Dr. Azar Jammine, and we've got Economist Duma Gqubule in the studio with us. And of course, we are going to be looking at the issues in Kolobedi, but that is for later. Gentlemen, thank you so much for joining us. A warm welcome. I apologize for the all-male panel. It was rather difficult to get hold of some of the female economists. But to set the scene, let's just listen quickly to Cyril Ramaphosa speaking at the breakfast before he went to Davos about how he understands the role of the Reserve Bank.
The independence, the standing, and the role of the Reserve Bank is sacrosanct. It will remain independent, as clearly stated in our Constitution. So there should be no debate about that. So, as people say we would like more employment, we should not be alarmed, and in fact we should say, we agree with you. We would like more employment, and all of us, in whatever we do, should keep an eye and focus on that.
That's, of course, Cyril Ramaphosa trying to explain what is in that ANC manifesto on page 35 that talks about a more flexible approach, that talks about taking unemployment into consideration, and that also talks about prescribed assets. Duma Gqubule, let me start with you. You've made the argument that the discussion around the debate of the nationalisation and mandate of the bank are two different things. Quickly take us through your thoughts.
Okay, I think the media was responsible for creating this confusion that went throughout South Africa for the whole first week. And I think part of the problem is that there's no more economics editors in the two major print groups and also in some of the television channels. So the first thing I said is that nationalisation and the mandate of the Reserve Bank and the whole issue of the independence are three completely separate issues that are not related. And the media was mixing the two. There were so many arguments by journalists saying that Cyril was the president was contradicting the SG. So the SG on ENCA, he said that they will be nationalized, they will nationalize the central bank, and then the president says we will have independence. Those things are not contradictions because most central banks in the world are independent and nationalized. So that is what I was talking about here.
Okay, fantastic. It's a great point to start at. Peter, you want to come in?
Yeah, I'm interested in the thing. I mean, I never saw the confusion that you saw, Duma. I didn't see anybody confusing necessarily nationalisation and independence, you describe it completely correctly. I mean, most central banks are nationalised and independent, especially in countries where they work. But I wonder what you think, Azar Jammine, of the notion that this central bank's mandate should be widened, let's say, not necessarily changed, but sort of expanded to include a much more sharp focus on employment, rather like the US Fed, I presume, and New Zealand recently added employment specifically to make it more explicit in its mandate. Does it matter?
I think it matters very much. If we thought that the lack of employment in this country was attributable to interest rates being too high, I would concur with you. No. But the reality is that the lack of employment in this country is due to a host of structural factors. Many of them are a legacy of our history, but the fact is that we are producing such poor outcomes on the educational front that are not preparing people for the job market. I don't know what interest rates would do in that to solve that problem.
I know you're itching to get in there, Patrick, but I want to go to Azar Jammine, to Dr. Iraj Abedian quickly. Dr. Abedian, you've worked in the state. This conflation that Duma was talking about so eloquently earlier, notwithstanding, do you think that there is an attempt to try and broaden the mandate of the Reserve Bank, and is that a good thing?
I think, first of all, it's important to check that back in 2009, where Minister Gordon was Minister of Finance, under the first Zuma administration, he made it clear in a ministerial letter to the Reserve Bank, and it's a public knowledge, that the mandate was agreed to be broadened, meaning primarily on price stability, but with full respect to growth, and growth is the proxy for job creation. So this whole debate, which keeps recurring every 5 years, is really a sideshow, taking our attention away from the real challenges that our politicians and our political parties should focus on. After 25 years, and I'm quite amused, but also saddened that our intellectuals keep focusing on the irrelevant issues as opposed to focusing on what are the real contributors to lack of growth, lack of job creation, and focusing the government, both at administrative and political leadership, on the real challenges, not these side issues, which has absolutely no relevance even when we nationalize, even when we broaden the mandate to whatever extra expansion we like, bearing in mind that back to 2009 we have already done it. It's not going to be a substitute for dealing with the structural problems of education, poor governance, and lack of attention to efficiency in the public sector.
Professor Bond, you know, Dr. Abedian was just talking about the fake intellectual debate that we're having every 5 years. Do you think it's a fake debate?
There's a real problem here. There's a red herring that's just been raised. Azar and Iraj are right, but they're trying to distract attention from a more profound problem in our Reserve Bank. That's its ideology and its competence and its willingness to take on the banks, which actually own it. And we've seen that with not just VBS, but the 17 big banks. Citibank, for example, admitted its skills in manipulating our foreign exchange. This is a Reserve Bank that is happy to let the country's wealth zip out of the country, massive illicit financial flows, to continually deregulate our exchange controls. To keep the interest rate now, we're all paying an incredibly high interest rate. It's about the 5th highest in the world amongst the countries that issue 10-year bonds. This is an ideological question, whether we've got state capture of the Reserve Bank by 3 brothers. I don't mean the Watsons. I don't mean the Guptas. I mean the 3 brothers in New York, Standard & Poor's, Fitch, and Moody's. Those guys are running our finance ministry and our Reserve Bank, and it's not for the benefit of all of us.
I see you nodding your head there.
Yeah, I just think that the Reserve Bank has mismanaged monetary policy for the past 3 decades, and I don't think it's a sideshow. We started off in the early 90s when they hiked interest rates by about 850 basis points and caused a recession. And we saw it again in 1998. We were talking about when they hiked interest rates to protect the rand, and it caused a collapse in the economy. We saw it especially after the global financial crisis. While every central bank in the world was cutting interest rates, we increased our interest rates for 250 basis points after the start of the global financial crisis, and we lost 1 million jobs, while the rest of the world, the majority of developing countries, didn't have a recession. The recession happened mostly in rich countries. So what I'm trying to say, it is not a sideshow. Our real cost of capital between 1994 and 2009 was 9%. How on earth is any business going to earn an acceptable return when they must double what their returns they have the cost of capital is at 9% a year, and it has decreased since then. So it is not a sideshow. And lastly, I don't think unemployment is always a structural issue. That is not true. It cannot be always a structural.
Okay, hold that thought, Duma. I'm seeing Peter itching to come in here.
I was going to ask Patrick Bond why he thought the Reserve Bank would deliberately and as a matter of policy allow illegal flows of money out of the country, illegal flows of capital. I mean, are they part of a deliberate and thoughtful and well-designed conspiracy?
Yes, it's the function, and I happen to work in a Reserve Bank, probably the nastiest, most destructive in world history. Paul Volcker's U.S. Federal Reserve. I worked there 2 years, so I've seen the worst of this mentality, and that's the mentality that infects our staff, who are captive regulators, Peter. They have certainly allowed. Why do we need a competition commission to go after 17 banks that rip us off on Forex? Can you explain why the Reserve Bank has just been absolutely blind to what the Global Financial Integrity says, $20 billion?
You're saying that they are.
They are. They've admitted it. They haven't. That's why they have the Twin Peaks, right? They're moving in to have prudential as well as conduct conduct, because they haven't done conduct, right? You can read this in any of the competition commission. Why do we need a competition commission to do the job that a bank supervisor and regulator like the Reserve Bank should be doing if it isn't that they're a revolving door? Why did former Governor Tito Mboweni get snapped up by Goldman Sachs? Why did Maria Ramos go into the Reserve Bank from ABSA? We really, not with the current governor, but we have a problem.
But the revolving doors is common throughout
and it's
the world.
Disastrous, right? Yes, we just saw it last week with Jim Kim, the World Bank president, going to a disgusting, filthy infrastructure fund. This is something that in your sector, Peter, I hope Business Day continually says, corrupt corporates, which we do have the most corrupt in the world, according to PricewaterhouseCoopers, right? And a corrupt state, there must be a Chinese wall to break up these relationships that allow crony capitalism to fester in this country.
Let me bring in Iraj. Iraj, do you agree with Patrick Bond's contention that the people who actually run the banks and this revolving door between them and big companies, particularly rating agencies, is part of the problem?
Look, I don't think rating agencies per se are part of the problem, but the running, not the individuals that are running the banks, but the regulatory framework within which the banks are governed has deep, deep problems. And that is why in this intellectual debate, be confusing the role of this monetary authority with, for example, the ability of businesses to borrow from the bank. It is not just about the interest rate, but also it's about terms and conditions. It's about the ability of the banks to assess small and medium businesses, lend to them, and make money available to the real sector of the economy that is a job creator. There is a big problem there, not only in South Africa, but globally. I mean, there is a problem nowadays which is broadly talked about, financialisation of economic activity.
Yes.
And in that, the more we financialize, the more we need to pay attention to the governing legislation that governs the banks, their lending, or lack thereof. To me, that's the problem. And of course, it then gets conflated with the personalities and so on and so forth, which doesn't help at all.
Peter?
Well, I was wondering, I mean, from anybody in the panel, you know, is there a level of interest rates, and maybe Duma, you can help me. I mean, if you wanted to make an impact on unemployment now and on growth as well, what would you do with interest rates? You are the sole member of the Monetary Policy Committee.
Okay, so first of all, I believe that the whole system of way we conduct monetary policy with one tool and one target is archaic. Like if you look at the developing countries, I was in China recently, the People's Bank of China, they have multiple tools and multiple objectives, which include growth, development, and the exchange rate. So they don't just, the interest rates are the last option. They have reserve requirements. They direct our...
those in this country as well.
Yeah, but they alter them to create liquidity in the system. They also have differential interest rates. They have credit quotas. And while I was in China recently, they also created a facility where they directly finance small businesses from the Reserve Bank. And as you'll know, so they get involved in production decisions where they pump money into favored sectors of the economy. So I would say that while we catch up with developed countries, we have to use the whole tool of monetary policy tools that other people, and they also control capital inflows and outflows to protect the currency and so forth. Yeah.
To Azar Jammine, how important is credibility to a central bank? In other words, that what it says is believed in the markets. I mean, my understanding, and I was reading a bit about New Zealand the other day, knowing that this conversation was coming up. And just before they changed the mandate, the former governor was going on about, in a speech, about how important meeting your monetary policy targets, your inflation targets, was to credibility. And that credibility was, above all, what central banks survive or fall on.
I think it's absolutely critical. And I think it's one of the reasons why the South African economy has not imploded completely, because it is the one institution that has maintained its credibility amongst international investors, partly because of its success in retaining inflation within the inflation target. I tend to agree with a lot of the other issues that have been said in terms of regulation, and the fact is that there is a structure in the South African economy of monopolization that permeates every facet of the economy, that is killing the ability of this economy to grow faster. And unless we attack that, we're not going to see growth.
Patrick Bond, the financialisation of the South African economy has been one of the issues that the South African Communist Party, an alliance partner of the ANC, has consistently spoken about. In fact, it issued a statement saying that the assumption from the Constitution, because people are saying if you want to change the mandate, you have to change the Constitution. They say that the Constitution actually talks about sustainable growth. But if you look at South Africa, we've never had sustainable growth in this actual period. I mean, surely they are right, aren't they?
Yes, indeed. From the early 90s, even Bill Clinton, running the United States, said it, that he had to answer to the bond traders, and indeed through the bond traders of credit rating agencies. And it just seems to me, you could call me populist, I don't mind, but unless you can control, as Duma said, your exchange rates, which are basically our capital controls, and last February we lost 500 billion rand because they lowered by 5% the amount that could be kept in the country by the big institutional investors. And while the Reserve Bank has that mentality, just liberalize, try to have a financialized economy, double what it was in 1994 as a share of GDP, this is a parasitical system, right? It's high interest rates, sucking out way too much money, letting it run abroad. And what we really need is lower interest rates, but to do that, tighter exchange controls.
Iraj Abedian, maybe just to try and sort of summarize the conversation, is there a way that we can, in South Africa, remodel our system, right? In other words, let's not break what's working, but let's fix what isn't working. We all want a more inclusive economy. We all want prosperity for more people. We don't want to leave people left behind. Can capitalism do that?
Capitalism of the nature that we have at the moment, no. Capitalism re-regulated in a different framework, focused on making sure that the national savings are on market terms plowed back into the economy for the production side of the economy, and therefore job creation, supplemented with appropriate skills and efficient government, yes. But if we want to fix one side of it, in other words, if we want to, I think Duma mentioned a bit earlier that you can't have one instrument, which is called monetary policy, dealing with a set of socio-economic problems that are deep and both contemporary and historic. You can't have a monetary policy, even if you control exchange rate, even if you make interest rate free, they are not a substitute for dealing corruption out of the municipalities and governments and sectors, or dealing with good education system that creates the type of skills that in the age of digitalization and fourth industrial revolution, we can have people who can have employability. The problem that we have is not interest rates, it's ability of the people to be employable. It's ability of municipalities and government departments and the state-owned enterprises to create the economy that is capable of competing and creating jobs. If we get those right, and then interest rate, absolutely, we can do it. But if we want to, everything else is off limit, let's focus and have a fake discussion on interest rate as if this is a substitute for everything else, forget it.
All right, Dr. Iraj Abedian, on that note, we have to leave it. This is a debate that is going to be ongoing. It is very clear that we can't have one, way of looking at this matter. There has to be more things in the toolkit that the Reserve Bank can do to actually grow the economy and, of course, make it more inclusive. Gentlemen, thank you so very much. I'm sure we're going to have you back on this panel to discuss this matter. Still ahead on The Fix, we look at the ongoing 15-year battle with the mining community of Kolobeni in the Eastern Cape. Don't go anywhere.